All right, everyone. Well, thank you so much for joining us for this next session from our month-long series of financial resiliency focused webinars. Just a couple things. If you could please keep yourself on mute for the duration of this session and put any questions that you might have in the chat, that'd be wonderful. And we are recording this session. And with that, welcome Dr. Tamika Payton from Psychometric Solutions.
Thank you. Thank you so much. Good morning, everyone. I first and foremost would like to apologize that I am on a mobile device. I promised to you that I was set and ready to go and, going through the content at 9:30, and then my computer crashed. So I am been frantically for the last 15 minutes trying to get my device back up and running, but I do have my mobile device. So I apologize for this unorthodox setting that I am in right now, but I'm here to give you content about financial literacy, and that's what's most important. So again, I did want to apologize. Nothing to do with the Maryland Department of Assistive Technology. This is our technological issues on my end, but we'll work through it. So good morning. So we'll go ahead and get started with the presentation. We have 90 minutes to share a lot of information. I have my co-facilitator, Kevin Martin. He is navigating the slides for me. Again, because on my device, I can't do much, but we'll get started. Kevin, you go ahead. So as I was saying, it's myself and Kevin. And the first thing we want to do is set the purpose of the presentation. I believe whenever we spend time with persons, we want to make sure we know what we're here to obtain. Otherwise, we're just sort of chatting. So the purpose of this presentation is to provide some information about things that you would find important as a business owner. So things for small financial literacy and financial management for small business owners. We will review concepts, things that as a business owner, it's important that you know as you finish this journey or you start this journey. We'll certainly supply you with lots of resources that you can check out and explore on your own. And then last, but certainly not least, as a former educator, the thing I think is most important is that in this 90 minutes, we will break and give you some time to do self-reflection. As a teacher and a small business owner, the one thing I remember disliking the most is that you go to a conference, you get so much information, but you don't have a moment to process it. So in 90 minutes, we won't give you the time you really need to work through it, but we will honor a few minutes to give you a moment just to process and make sense of the content you just took in. All right. And then next, we want to set some goals. Again, it's really important that we know why we're spending this time together and what we intend to get out of it. So the first thing we'll do in terms of a goal, we'll make sure you have some stats and know the status of small businesses in the US today. We'll talk about the practice and the promise of goal setting for small businesses. We'll go over some financial management terms and a few best practices. And then most importantly, we'll talk about the types and maybe some sources of funding for small business owners. All right, so here's a look at our agenda for today. Like to think we'll take it in 3 blocks. So we have about 90 minutes. So we'll do 25, 30 minutes per block. And then we'll certainly wrap up with some questions and allow you to ask anything in the chat, and we'll address those questions as they come in. All right, let's jump right into it. First thing, we want to start with self-reflection. It's what I call our baggage check. So you're going to come in any situation with some baggage. I just call it baggage, whether it be you woke up late or your device is jacked up like mine is. Everyone enters a space with baggage. And then we're talking about financial literacy. So I can imagine how much baggage comes with that. So the first thing I want to do is pause for a second and ask you to think about, what are your concerns? Or what do you believe might be a concern in terms of financial management of your small business? And if you like to put some answers in the chat, we certainly welcome them. But if not, again, it's mostly for self-reflection. just go ahead and think about that bag and drop it off. Let us know. What's a concern? And if you're not already in business, what can you foresee to be a challenge or a concern for you in terms of financial management? All right, and Mr. Martin, if we see anything in the chat, please let me know before I move on. All right, if not, let's jump right into the status of small business. So first we're going to take a little guess. We'll call it a trivia, if you will. And I want you to see if you know any of these answers, or just take a guess at it. So wait for the next slide to pop up. All right, so take a look at these questions and see if you know any of these answers. There are how many small businesses in the United States? Take a guess. How many of them registered in 2020? If you want to jot it down, if you have some paper nearby, that's fine. What's the percent of small businesses that are non-employers in the United States? Meaning just one individual owns and operates the small business, doesn't really hire anyone. And then what do you think is the percentage of small businesses that have paid employees in the United States? All right, so another second to get those answers in. And then we'll see how you did with your guesses. All right, let's take a look at the answers. All right, so if you got anywhere near 31 million, you are correct. As of 2020, there were 31 million small businesses registered in the United States. Let's see if you guessed how many came to us in 2020. So if you were anywhere near 4 million, you are absolutely correct. In response to COVID, there has been a drastic increase in the number of persons exploring small business ownership. So if you started before 2020, you joined a growing population. And if you jumped in last year, you joined a wave. So you can see pretty comfortable number overall, but 4 million in just the last year. Let's look at percentages. What is the percentage of the businesses you think are just self-employed? So believe it or not, of that 31 million, 80% of it are individual business owners. They own and operate the company. So those of us that are mathematicians and you're quick with the math, you probably can work your way around this next number, give or take with some rounding. But the number of then small businesses that have employees, go ahead. You can see it's just at about 19%. That would get us to 100. So thought that it was important before you even start to discuss financial management and literacy and all that great stuff, just to understand where you are in the greater scheme of things and what this means going forward. So here are the stats, but the other thing I would like to talk to you about, let's just take a look at that in terms of how it looks over the span of time. So business survival data. So while we have 31 million in standing, thought it would also be important for you to see how that looked since 2008, if you will. So you can see the blue bar is births. That's the small business advocacy's group of way of saying how many new businesses were created. And then the red bar is so doom and gloom, dun, 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 deaths. How many businesses did not survive from year to year? So as you notice, in 2008, the number of businesses not surviving surpassed the number of businesses that were registering. And that was right around, for some historical context, remember 2008 and 2008 is when we had that last financial crisis, if you will. And so you'll see that as we started to work our way through that, or during that period when we were in financial constraints as a country, you'll see that the number of businesses started to close a lot. Then you'll see as things start to pick it back up, then people joined small business ownership again. So that's quite similar to what we're seeing right now in the midst of COVID. So let's move on. So talking about small business survival, I can tell you lots of people get started. I do small business development consultancy work, and lots of people get started. The thing about it is how many of them will survive, that they would not be captured in that death rate, that very dramatic term, in the next 2, 5, 10 years. Again, I thought it would be important to share with you the typical survival rate for business in the United States. And these stats stop at about 2018. That's the latest data that's out there. But general rule of thumb, only about 50% of businesses make it to the 5-year mark. Most don't make it to the 2-year mark. As you can see, only about 67% will even make it into the 2nd year. Most businesses record to fail within the first 18 months of their development. If you make it to year 5, you're considered like, yay, you got halfway through. And then anything greater, you are only the strong survive. It's the survival of the fittest. So let's look at some things. What contributes to that? So let's look at the 4 common reasons businesses are unsuccessful. Unsuccessful marketing initiative. A lot of business owners believe if I just open, they'll come. There's faulty infrastructure, or the business model wasn't strong to start out. It was, I got an idea and I'm going to just move forward with it. And some of those other things weren't talked through. Unable to find or retain adequate management. One of the reasons we're in a hotel today is we're doing a job fair with our other program because employees reach out to us and they need help. It's difficult to find the work staff that you need, and definitely folks at the management level that can help see your vision through. And then last, but certainly not least, the top most common reason businesses go out of business is there's a lack of capital or funding. Right? So that sort of sets the tone for what we're talking about today and why this information is important. So let's move forward and see, how do we make sense of some of this? The one thing I tell all business owners that I work with, that they come to me, unless you're an accountant, numbers usually isn't the thing that you want to do the most, right? Like most of us aren't home like, yeah, let me check out my profit and loss statement. Yay, numbers. Most of us get into business to do the business that we love. And one of the other courses I teach, I always say that bakers don't go out of business because they don't know how to bake. Landscapers usually don't lose their business because they don't know how to do fantastic landscaping. Most companies go out of business because they don't understand the principles of business. Most commonly, as we saw, that financial piece. So while you may not like numbers, while it may not be your strong suit, as a business owner, you can run, but you certainly cannot hide from having to have a good, solid foundation in financial literacy and management. So this is a very great first step. If this is, continuing education for you, that's great. But my goal today is to make sure you know some of the basic information that should get you on track, that you won't be one of those earlier companies in those survival rates, that you'll make it all the way through year 10 and year 15. All right, let's move on. So now we're going to take a look at financial goals for your business. And it's really important that we start here because this will set the rest of your work. So we'll start first with the self-reflection. Again, I just want to give you a moment to think about this content before we move on. So what are your business financial goals? How will you know when your business is successful? Is it when you're making a certain amount of money? Is it when you make a certain amount of product? Just give it a moment before we get too deep in the content and think to yourselves, what is success? How will you know it? All right. Now, most business owners that I work with, they have very generic understanding, or they will communicate very generic ideas of success. I'm going to work for myself. Okay, that's one measure. I'm going to make a lot of money. That's usually, I'll have lots of customers. Okay. But to be very successful in business, you need to be a little bit more direct. So you should be thinking about your goals, not today, not tomorrow, but you should develop them for 1, 2, and as far out as a 5-year goal. In those measures of success, you should think about the topic that's going to prove you're successful. Examples, again, I'm going to have a certain amount of money in sales. I'm going to have a certain number in my client base. My profit margin might be hitting at a certain number. And so we'll get all, we'll touch some of that stuff. But if you're just saying, I want to be successful, it's time to go a bit deeper. So I want to give you some practices and strategies for taking a deeper dive into setting business goals. One of those best practices are SMART goals. So we'll go to the next slide. You'll see that. SMART goals actually developed in the business world, and then us in education, we borrowed it. And so if you've seen it, just know that we are returning it back to its original owner. It started in the business context. So a SMART goal helps you get very specific, measurable, achievable, realistic, and time-sensitive goals. If your goal for your business does not hit these elements, you really are still sort of just in the beginning phases of goal setting. So when a goal is specific, you know exactly what that measure will be, which is why we start the question, how will you know when your business is successful? I will have this number of clients. So that's measurable. Then you want to ask yourself, is it achievable? If you have no clients today, you probably don't want to say, I'm going to have 1,000 in 2 weeks. Not going to tell anybody it's impossible, but it may not be achievable in that time frame, or it may not be realistic. And then that takes us to our last component of a SMART goal, is time specific. So maybe you can have 1,000 clients, but if you're being realistic, it's probably going to take you more than 2 weeks. And so you want to do some market research. You want to think about your marketing bliss. What would be a realistic time frame to get you to that 1,000 client mark? Is that 1 year? Is that 6 months? Is there something you're going to do to help you get there? Other tips we want to share with you about developing SMART financial goals is that, and we can move ahead, it shouldn't be, again, an activity where we're just sort of talking about it. You want to do it in a way that you are consulting your numbers. So again, you must, as a small business owner, stay very on top of your numbers. You actually want to create an action plan for it. As I discussed, if I know I need 1,000 clients, or that's my goal, what are my actionable steps to get to that goal? What am I going to do differently? Am I going to do pop-up shops for the next year? Am I going to pay for Facebook or Google ads to get me in front of that many clients? What action plans will you create to do that? Most times we see that in the business plan, but even if you're not at the business plan level, you can think about those activities that's going to move you forward. The greatest advice I can give you as a business owner is never get comfortable. Sometimes that puts you in places like I am in today. You're doing 2 things at one time, but your goal is to do the things that's going to move you forward and not get comfortable in where you are. Then most importantly, you need to allocate some time for just this. Sitting down with your numbers, thinking about what's realistic, and making a plan to get where you need to be in terms of reaching your goals. All right, so we'll go into another moment of self-reflection. What insight has looking at the statistics on survival, the survival rate for small businesses given you? How does that inform your thinking now as a business owner? Does that surprise you? Did you think it was even worse than that? But what insight did it give you as a small business owner? And then we'll pause here to see if we have any questions before we go into our next block. With me not being able to get into my device and Kevin presenting, we can't necessarily man the chat as greatly as we would like to, or as much as we can in the past. So if there are things coming in that we're not seeing, if one of the other facilitators would like to help us with that, we would appreciate it. All right, so as you're wrapping up your reflections, we'll move on into our questions and just give you an opportunity to ask any questions that might have come up. Let's go to our next slide. All right, so if we don't have any questions, we'll move through to our section where we're going to explore some concepts and best practices of financial management. Now, I will tell you that you can take a semester-long course on this. In other settings, this is a 4-hour, 2-day course, so 8 hours altogether for us. And so in the opening, one of the things we said, we'll explore and refine. I don't expect that anyone will walk away being financial literacy gurus or ready to teach their next course. However, you will see some terms and you'll come across some best practices that when you're ready or when you come across it in your own quiet space, it should ring a bell. That's our goal for today. All right, so let's get started. First, we'll start with what is financial management? What does it mean? What are the components of financial management? So one of the main components or the greatest importance of financial management is that it's your main component of business success. Like we said in the beginning, most businesses fail because of their lack of capital or funding. It's not because they don't do a great product. It's not even because they can't find clients. It's because, or consumers, it's because they haven't worked through the proper protocols to turn those numbers and that revenue into profit. And so understanding the principles of financial management will help you do that better. It's also the greatest indicator of a business success in terms of, is it profitable? You know, we all want to get into work to do what we love, but we ultimately also need to make money. You know, we need to be successful. In the RISE program, which is how we are connected to this event today, the title of the program is Reaching Independence Through Self-Employment. We talk about self-sufficiency. So you want to be in this business venture to ultimately be able to support yourselves. So understanding these principles will put you in the best shape to do that. Financial management is also important because it's going to assist you in determining your next opportunities and your expansions for growth. And in some cases, like our businesses that don't survive, if they were savvy in their financial management, it would also have given them information on when it's time to downsize and when they needed to make other strategic moves to keep their business going. And so things you'll hear like, you know, there could be company layoffs, there could be mergers, or just in our small business world, it can be find another vendor, cut the price here. But do something differently to make sure you're staying where you need to stay and be successful. And that's that last bucket, how you can, you know, are you required to establish new prices and work with new vendors? Because, you know, you may have that local provider that you love working with, but if their numbers aren't helping you be profitable, then that's going to be a problem for you. So the most important thing to do, and go to our next slide, is being able to speak like a boss. And so we'll go through some terms and I'll teach just a few of them to make sure, again, when you hear them again, you're like, oh, I know what that is. So our next slide is, let's look at some common terms. In other settings, we'll actually ask you to participate in a poll and you would mark those terms that you know. But for today, we'll just have you take a look at those terms. So as soon as we get to our next slide. And just look and see which one of these are you familiar with? Are you an expert in any of these? That you know exactly what these are, you know exactly how to communicate them, and you know what they mean to your business. If any of these terms are like, I kind of know what they mean, maybe you'll give me some insight on it. We'll talk through some of the most common ones. But then if you see some here that are completely unfamiliar, I have no idea what that means, those are the ones I would ask you to jot down. That's your homework. These are very common terms in the business world that, again, if you can speak like a boss, then when someone asks you, what's your operating income? You will be able to explain that without pause. When someone says, talk to me about your revenues, you understand your business revenues and what numbers were used to come up with that terminology. All right, so like I said, we'll get into a few of these in 90 minutes. We just can't go through all of them, but we'll touch some of the most important ones. In financial management, it's going to be very important that you understand your accounts receivables, money that is due to you, and your accounts payable, monies that you have to pay out. Every month, you will be on top of this. In some businesses, especially if it's direct sales to the public, you'll probably be needing to do this more like weekly. And some other consulting-based businesses or contracting businesses like myself, you may be able to do this quarterly. But accounts payable, accounts receivable, certainly terms you need to be familiar with as a small business owner. Assets. In our personal world, you know, we think about assets, we think about our homes, we think about our cars, any money in the bank. In business world, you need to make sure you're accounting for all of your assets, including inventory, any merchandise that is yet to be sold, any interest that's due to you on other ventures, or you have a big order coming that's already out there, you have materials to make something. That's anything that you could sell to retrieve money or earn or generate income from. That is considered an asset. All right, another term you'll hear a lot in business. So if it's not one that rings a bell, let's make sure we put this in our vocabulary. Cash flow analysis. So again, a lot of businesses can be successful. They can be making the money, but if they don't stay up on an analysis of the flow of the money, it really does them no good. Money moving into the business. So how quickly does that money come in, and the flow of how quickly it goes out? The best example I can give is let's think about a new Starbucks. I use this example a lot because right on the corner of my house, Starbucks popped up. So they had to build the building. They had to retrofit the space. They had to buy the coffee, get the cups, find the employees, all that good stuff. So how fast is money coming in? And then how fast does that money go out? So when you think about how much money they had to put in to just get Starbucks up and going, how many cups of coffee do they have to sell to, one, make that money back, which is what we call break-even point. That's a different point. But what's the flow of that money? So how many cups of coffee have to come in to make that money back for a month or a quarter? And what's that flow? Do they see their numbers weekly? Do they see their numbers, that money mature monthly? Especially when you're talking about credit card sales, right? It's different when it's cash-based. The money flow will be different because you sell an item, you get the cash today. If you are accepting credit cards, how long does it take for the credit card agency to change that transaction from the credit card into a cash payment into your account? So that's understanding your cash flow. How quickly does the money move in, and how quickly does the money move out. If at the end of the month or whatever period you look at your cash flow, if you have more money coming in than you pushed out, you have a positive cash flow. If you have a negative cash flow, it means that you pushed out more money than you brought in that period. Doesn't mean that you're not being profitable. It just means you're going to be in a pinch because your money doesn't come in until after you needed to spend it. In my case, in contracting, that's all of our world, because we have to do the work before we make the money. A lawn service may be in the same predicament, right? They have to buy the lawnmower, they have to buy the gas, they have to drive to the client's house, they have to cut the grass. So all that money already went out before they get the money back from their client. And so the flow of how that money comes back is, do their clients pay weekly? Do their clients pay monthly? Do they have clients on a payment plan that covers the quarter? So that's a cash flow analysis in a snapshot. Very important term for business owners. All right, then we'll talk about liabilities. We know assets, and when we think about liabilities in business, it's anything that the business owner needs to pay out in any given period. So it's your account payables. Who do you owe? If you accrued any expenses, say you're in a subscription-based services, that's a liability. Any loan, any mortgages, or any advance payment that you already received will count as a liability because you're not going to make that amount on the full project. So quick example, let's say you are a wedding event coordinator and you ask for a 20% deposit. Well, you've already taken that 20% out of that project. So when it pays off, you can't count that 20% again. So then the only thing that's payable to you now, accounts receivable, is that 80%. So liability refers to any financial amount that you owe as a business. All right. And so this is what I call our stretch break, at least our mental stretch break. So if you need to stop, stretch, make some sense of it before I dump another term on you, this is your time to do that. If we have any questions, again, if anyone sees anything in the chat that myself or Kevin can't get to, and we want to take a moment to address that, this would be a good time to do it as well. Financial literacy, I always want to give the people just a moment because it's so much to dump. Okay. So if we're not seeing anything, we can move on. And thank you so much for your patience, again, dealing with our my mobile device issues, but I'm hoping the content is something you're taking in. All right, so operating expenses. This is an account of all the costs that's tied to the operations of your business. This is not the cost for producing your item, but it's everything else. So it usually includes payroll, which should be yourselves. If you're working for yourselves, you got to pay yourself. It should include rent, and it should include all those other general administrative costs. So if you need insurances, if there's licenses, if you do trade shows, or you have marketing materials that you need to purchase, your internet costs in a lot of small businesses, your cell phone, if you're using part of it for the business, that now becomes an operating expense. So any of the costs outside of production of that product or service will fall into operating expenses. So as a small business owner, it's very important that you know your operating expenses, because the goal is to keep your expenses as low as possible. So when I am working with small business owners, so many of them want to jump into, I need a space, I need an office, I need a, no. Let's see if your numbers justify you getting that space or finding that kitchen or whatever it is you're looking to purchase next. A lot of times we go in it the opposite way. We think we need it, we jump out there, we get it, and then we've created an expense that our numbers really can't support. So it's important that you know your operating expenses, you know how to calculate them, and best financial management practices says that you don't increase your expenses unless you've done your homework to show that your business can withstand that expense. Okay. All right, another important thing that comes up a lot of time is owner equity and owner's pay. A lot of self-employed individuals will jump into this work and just start working. They've never worked out how they're going to pay themselves, haven't given it any thought. The money's just going to come in, and the small business ownership curse is that we immediately go out and start buying things. Again, we buy this extra space. Oh, I need more inventory. You need all of these things because you want the business to be successful, but you didn't account for paying yourselves. So, and in some small businesses, there is no money to pay yourselves in the first year, maybe two. Again, that's break-even point. We teach that in our course. Most businesses have to put in about 18 months. 6 to 18 months is the common time frame before you see a nickel in profit. So it's important that you understand how to handle owner's equity in that period before you break even, and then how you handle it after. Whether you are a sole proprietorship, LLC, a limited liability company, or an S corporation, you can pay yourselves in different ways. So you can take what's called an owner's draw, and you can take out a certain amount or a percentage of the revenues that you've earned monthly, quarterly, or in some cases, some individuals, like with corporations, will just wait to take that money annually. As I mentioned, there may be a period, again, most common, 6 to 18 months, where you won't be able to take any money out because your expenses will say that I need to leave that money in the business account. Well, then you will be building what we call is sweat equity, owner's equity. You want to track that amount because when the business is profitable, you want to be able to take that money back. And that's where we're going into our next slide. So going back to the Starbucks example, again, how much money would an investor in Starbucks need to put up before it sees any of its money back? So they have to open the store, buy the cups, buy the sugar, buy the coffee. They're probably going to be working at the coffee shop before they see any money. But that sweat equity, your business owes you back. Your business can't afford to pay you right now your fair market wage. One of my favorite authors in Profit First will say, act your wage. Don't cheat yourself. What would it cost you to hire someone in that position? And you should be tracking the hours and the average rate for that position that you're assuming. Now, for small business owners, I usually joke in my other courses, we're the butcher, the baker, and the candlestick maker. So we're doing lots of jobs. So you may not be able to pay yourself for all three, but at least one good job. Act your wage, pay yourself a fair wage, and keep up with those hours and track your sweat equity. That's how most of us get started. All right. Another important term in small businesses for business owners is credit and credit worthiness. This comes up so much in some of the work that I do. It's important that you understand your personal credit and your business credit. So I'm going to give you some insight on that and then some sources that you can find to check it out. A lot of us are comfortable with the personal credit score. We know that our credit score ranges from about 300 to 850. We want to make sure, though, in terms of business owning, before you start your venture, you do some work on your personal credit, because your personal credit will certainly impact your business credit. So a lot of people go in, I need to develop my business credit. I need to get the business going. And I first say, well, where are you personally? And then we have to backtrack. Because it's important that everyone knows that every person in the United States is entitled to one free annual credit report. And don't do Credit Karma, some of that other stuff, because I think you have to pay for that. But if you go to annualcreditreport.com, that is the governmental site that you can get. Shouldn't say governmental, but it's a government funded program that entitles you to one free report a year. We'll take a look at some of the components of a credit report, but the things I really want you to walk away with as a business owner are the 5 C's of credit: character, capacity, capital, collateral, and any special conditions. It's the same in personal, but it's really important in business. Character is who you are as the business owner. Are there any judgments out there against you? Whenever you even go to apply for a bank account in the state of Maryland, they're going to go to the government site, which is Maryland Business Express. They're going to look up your business and they're going to see, are you paying all your taxes to the state of Maryland? If you're not, they're not even going to open a bank account, because it speaks to your overall character and how you're operating as a business owner. When you're trying to get a loan, they're going to look at capacity. Are you in a position, or does your business have the promise of making this money back that you are asking for? Capital, well, how much money on your own have you come up with? Did you borrow? Did you save? Do you have private investors? They're going to take a look at that type of stuff and make a judgment about you. They're also going to look at collateral. Well, we saw the survival rate of businesses. So a lot of lenders want to know if you should be one of those businesses that don't make it to year 1, 2, or 3, what collateral do they have to get their money back? See, so they've done this work too. They know that most businesses don't make it. And so you need to show, one, again, you have the capacity or some capital already to keep you going. And then sort of their backup, like my mobile device today, is to think about what collateral. Should this not go well, what can they take from you? And then any other special conditions. Is your earning or your potential or your capability tied to something specific? Because that's going to determine your rate. It may determine the loan. It may, I've seen things in business where they say, we'll give you the loan, but you need to get a life insurance policy that lists us as the beneficiary. So the conditions are all the things that the lender will take into account and under what conditions you're asking for that money. And when all of these indicators are strong, you are best suited for business credit. All right. One of the things that we can give you, and we can stick this in the chat, I won't take too much time, is to go over our sample credit report from Experian. I believe most of us will probably be familiar with that. So for the great of the masses, we won't go into the report, but just understand that you will get a rating on your personal on your personal credit from very poor to excellent. And again, there are ranges, and those ranges go from about 300 to 400, maybe very poor. Once you get into 500s, you might be considered a poor credit score. When you get into your 600s, you're fair. And then anytime you cross about 650, 670 personal, you'll start to etch over to good. And then excellent is anything above a 700. Your conditions, if you're in that 700 to 800 range, will be very different, are likely going to be different, very different than someone at that 500 or 300 range. So then the one thing we like to do is talk about, how can I improve my credit score then? That comes up a lot. I want to build my credit. I want to build my personal credit. I want to build my, my business credit. What are some things I can do, Dr. B? That comes up in almost every meeting that I'm in. Open 1 to 2 accounts and keep them as current, as solid as you can. Because unfortunately, no credit is as bad as bad credit. If lenders can't see what you've done in the past, they can't judge your character. So having some credit is really important. When it's time to start establishing that business credit, see if you can get a small business credit card. Don't put too much on it, but very basic expenses, and make sure you pay it off every month. So on-time payments is one of the biggest indicators of your credit worthiness. One of the keys in small business ownership, which is what, and in personal, to make sure you're paying things on time, is just put it on automatic payment. But that's why you really need to know your operating expenses, and understand your cash flow so that if you're putting it on automatic draft or payment, you know that money's in there because you understand the flow of your account. So I know that at the beginning of the month, all my money is in there to carry me throughout the rest of the month. Or I know by the 15th, I got to deposit more money into that account. Go ahead and put yourselves on automatic drafts, and that will keep yourself, keep your business credit. You'll either develop it or keep it strong. The best other step is anything that you're past due on, start there. Just go in, catch up anything, any of your late payments, because late payments are huge indicators on your personal and your business credit. If you have vendors that you're buying from and they are reporting to Duns and Bradstreet, we'll talk about that coming up, and you're not current, they're reporting that, and that's going to hurt you. Pay down any debt. Don't fall for the promotional balances. Oh, you know, this, that, only get what you need. Businesses should not be surviving off credit cards. They should be using it to work through, one, for convenience, just because it's easier to pay some things with a credit card, but it shouldn't be a gap to get you from revenue to revenue. We really don't want to use credit that way. Apply for new accounts sparingly, which is where I was going with the don't apply for everything you see. Don't let any one little, you know, oh, save this or low balance transfer. Don't fall for it. You need 1 or 2 accounts. I don't care what they're giving, what promotional thing they're giving. Back when I was younger, you know, banks, it would be a free toaster or an iron. Now it's 0% interest, or we'll double your cash back, or just don't fall for it. Get the credit you need to keep your operations going and to make your lives easier in terms of paying those expenses. 1 or 2, and that's it. All right, now we're going to go into our business credit. So there's a small little video that we'll play. So we'll see if technology works with us. We'll get it queued up. We'll have to do a share screen, and then the one thing is to make sure we click that sound feature. In the circle, there is a little play button. It doesn't seem like it's working for us. Right in that business credit, right about there. All right. We can't get that to play. And again, I apologize because I'm still on a mobile device, so I'm no real help. Okay, so what we can do is give you that video. Once we wrap up, we'll send the link to you. We'll make sure that the other facilitators can get that to you. Again, we apologize, but I don't want to waste too much of critical time when I can share some of the content with you. But the video was a nice little addition. But in terms of business credit, Dun & Bradstreet, you've probably heard it or you've seen it on applications, your D&B number. Dun & Bradstreet is pretty much the primary business reporting agency. Be careful with them as well, because they will ask you to buy a new profile and this. You don't need to. You can develop your Dun & Bradstreet credit profile organically. Do your course of business, and it will start to develop. You don't need to pay for some of the things. Same type of thing as a personal credit score. There is a range. The numbers are different. So it goes from 0 to 100, as where personal is from 0 to 850. I'm sorry, 300 to 850. With your business credit score, it goes from about 0 to 100. Again, ranges say how strong your company is in terms of your business credit. Unlike your personal credit, where you can go and pull your file, business credit, Dun & Bradstreet are the gatekeepers, and they don't give it out. Once you apply for something, if you'll be flagged, Dun & Bradstreet will say someone looked at your, company wanted your business profile, and you can get the indicator in any, I don't want to say adverse, but you can get the indicator on who applied or who checked your company out. And then at that point, you want to pay for to have the additional profile release, I would say do so, but don't pay for it in advance. So Dun & Bradstreet, it's free to sign up. So if you're in business and you haven't done this, you want to do this. And if you're just starting out, you certainly want to consider that, starting a Dun & Bradstreet account. Again, don't pay for anything yet. Just go and register the free account. And it is the first step into developing your business for your credit. All right, so we're good on time. Let's go into some financial management best practices. And as that's coming up, Kevin, I know you are doing a masterful job and that you are monitoring this, navigating the slides for me and the chat. But if there's anything coming in, I can stop now before we start talking about budgets. Okay. All right, nothing in the chat. So let's talk about budgets. In terms of business financial management, a budget is the most important thing you can do. I know that in our personal lives, we probably heard this. If I was listening to some of the people in my lives earlier, I would have been budgeting and doing things quite differently in my 20s. And then in my 30s, it was like, whoa, this is really important. As a business owner, it's the same concept. A budget, of course, we know the concept, most of us, is that it's where we list all of our expenses, and we usually do it in some type of category. We certainly want to do that in our business as well. Tracking your business expenses, all of them, will help you understand how much your business really costs you to run and operate. So like I said, any savvy business owner, if I'm talking to you and I say, what's your operating expense? And you start calculating in the air, I spend this, I spend that, I'm going to know you're in danger, because any business owner needs to know that expense well in advance so that they are planning for that and understanding their cash flow. Quick little example, when you think about, again, a lawn service or florist, sometimes, you have to spend money and you need to know when you'll see more money so you can set your budget that way. A florist, one of the ones I worked with in the past, their high season is between April and August, right? You got weddings, Mother's Day, graduations, all that good stuff in that period. So a florist's cash flow is going to look fantastic from April to about August, maybe September, I think one person told me. And then after that, the weather changes. And so that flow of money is going to start coming in differently. So though a florist can make $30,000 in June, they can't blow that $30,000, because that $30,000 is probably going to have to keep them operational during January or November, December, when people aren't buying flowers as much. We're not having as many winter weddings as we do summer weddings. So a budget is a tool that will help you keep track of those expenses, and help you knowing those expenses will keep you on top of your cash flow. So just a quick example of a budget tool. It can be very simple as the one we're showing next, or you can be really complex with it. So again, very simple, or you can make it very complex. But the main components is you have categories. You're listing what those expenses are. You could do it monthly or quarterly. But I would tell anyone in small businesses, if you're doing it only annually, you probably already missed the mark. But you should, from month to month, anticipate what your budget will be. So I want to spend this much on marketing. Some of these numbers will be fixed, but some things based on the event, or again, your time frame. So a florist is probably going to spend a lot more in supplies, maybe April and May, than they probably will in January. But you want to know what those monthly projected expenses are. And then you want to come back when you're doing your numbers and you actually want to tidy up and say what the actuals were. So for small business owners, it's important for us to do both. Create the budget in advance. This is what I want to spend. And then go back and reconcile and see what you actually spent. So again, that will give you an opportunity to fix your numbers if you're overspending in any one month. Right. Another must do for a business owner is to understand your projections. This is a very simple tool, but if you go to any Excel template or you Google financial projections templates, you'll probably find something on the internet. But for business owners, it's important for us to understand how our money may come in. Now, someone will say, but I don't know. Well, I'm not looking for you to be exact. It's a projection, but make this projection based on an educated or some marketing or some understanding of your market, of how things flow to help you make those projections. So again, if I'm going to a florist or a landscaper, their projections for the summer months are probably going to be a lot higher than it would be for December. So if I'm working with a landscaper and his projections for December are just as high as they are for June, I'm going to ask him, does he also provide snow blowing or snow plowing services? If not, I'm going to tell him his projections are quite bananas because there's no grass to cut. So what are you doing? So he would even have to give me another product or service. So that's what the roles represent. That would make sense to me. So if line 1 is products and services, it's the grass cutting or mowing the lawn. Okay, so that number might be really high in June. Then the second service or product line could be snow plowing. So of course, I wouldn't expect to see a huge projection for snow plowing in June, but I would see it a lot for December. So those first 2 line items might cross each other out or balance each other out. So when a product sells a lot in the summer, it may not sell in the winter, but then it, the opposite for the products that you sell in the summer or winter. So as a business owner, again, it's very important that you understand that, not just know your product, but get as savvy as you know when that product sells the most. Case in point, anyone that has a product that's specific to the holidays, this is your time. So just about last week, we started to see everybody with pumpkin spice, anything, coffee, cakes. If you're bed and bath or body, what is the store? My favorite candle place. You guys know it. Bath and Body Works. I spend enough there. I should know that. You've already got your coupons for all your pumpkin spice fall stuff because they've long done the projections and they know what they make off the fall season. So projections will help you make good decisions for your business. Bookkeeping. As a small business owner, I cannot tell you that keeping your books is going to be what makes or break you. Again, if you're not an accountant, you're probably not running home now or once you get started saying, I want to crunch my numbers. I can't wait to do it. I love this stuff. That's probably not going to be you. That's just not any of the business owners I work with. It certainly isn't myself, but it's work that's really important. Bookkeeping is important not only to you as a small business owner, but it's also important because there are other implications for small business owners like the IRS, right? There's a real thing. You can be audited as a small business owner. So your greatest success will be in how well you keep your books. And so there are a plethora of bookkeeping strategies, services. You can work with an accountant to do it. In most small businesses, we sort of do it ourselves. I don't promote any one product, but QuickBooks is a very known platform that you can do bookkeeping. It would allow you to do invoicing and some great stuff. But business owner to business owner, I want to make sure you understand the importance of bookkeeping and then some of the components that you should have in any bookkeeping tool you use. So it's a place where you want to organize your receipt. Old school, get the receipt, you put it in a box or a bag, and you just let the paper sit forever. In today's world, it's just too much technology out there for that to still be a common practice. So if you have a good bookkeeping system, you have a way to itemize those charges and keep hold of those receipts. QuickBooks and some of the other platforms are so savvy, you can take a picture from your mobile device and it will upload and scan right into the appropriate place. I mean, we can almost do, I'm giving a presentation as unorthodox as it is from a mobile device. So if I can do 90 minutes of this and share info, you certainly can snap a receipt and keep it all together for your good bookkeeping, and you're not shuffling through receipts at the end of the year. I would say don't toss out the receipts. You probably want to hold on to the paper receipts as well, but a good idea to keep them electronically because numbers fade, all that good stuff. And business, IRS access to keep receipts for up to 6 years. So if you get audited for some strange reason and you say, oh, I don't have the receipt, if you can't justify some of those expenses, the IRS can classify them as they like, right? So not to scare you, but just to share you the importance of bookkeeping. Another component of a bookkeeping, not yet, let's go back. A few other things we want to talk about in bookkeeping. Profit and loss statements, P&L, if you're fancy, or income statement. Any good bookkeeping apparatus should allow you to do that. Profit, everything that comes in. Loss, anything that went out. There should be a statement that you look at, usually monthly, if not quarterly. If you're working with an accountant, they can do it. But if you are using QuickBooks correctly, it is categorizing those expenses and that profit for you, and it will produce a profit and loss statement, P&L statement for savvy business owners. Any bookkeeping apparatus should allow you to see your accounts payable as well as your accounts receivable. So if you're putting that information in there, at any time, you should be able to run a report and understand who owes you and who you owe. Again, it's the best way to keep track of your expenses. And those are the main components of any good bookkeeping. So if you're not going to use a system, then you will be doing these things independently. But doing them is the foundation for financial management. If you're missing any one piece in financial management, you're going to be setting yourself up to not be in the best position to understand some of the things we talked about earlier. When your profits are solid, when you need to charge more, maybe when you need to reduce your expenses, but you need all of these components and you need to review them regularly to make sure that you are being savvy and a good steward and practicing good financial management. All right, now let's move on. See if we have any questions now. Again, lots of content, not the, the most lively stuff. So if you have any questions, I'm seeing nothing from Kevin. All right, then let's take another moment to be self-reflective. There are a lot of financial management best practices, and I don't expect everyone to go off and do everything today. But what I will ask is, what's one term that you came across today that you can commit to, that you've learned, or you at least refined your understanding of that, and that will be where you anchor yourself? And what's one practice? What is one of the best practices you heard that you can commit to doing as of today? Maybe it's something as simple as a budget. Maybe you're going to go and pull your annual credit report. But stop for a moment and think about the one thing you can do today to set yourself straight for financial management. And maybe one term, ask you to mark some of them. Which one is one that, okay, now I really understand that, or I learned something more about it. All right, I'm seeing someone put that, hey, I'll use QuickBooks or some other accounting or bookkeeping software. Start now. Even if I'm not, really generating sales, I can start tracking my expenses. Awesome. All right. So hopefully you've taken that moment, thought it through, and you have one thing that you're going to walk away with today and say, I'm going to try that. Or I know this one term now. Didn't know it before, but now as a business owner, I know this. Lots more to learn, but I at least know this. I know accounts payable and receivable. I know what owner's equity is. I know what sweat equity is, and that I should be putting some money to the side, that when this business makes it profit, it owes me this. Okay. All right. So we're going to get into our last block for today. And that is about funding your business. Again, as when we started, we talked about the lack of funding being one of the primary concerns. As a small business owner, I will tell you, it's difficult when you don't have funding. Is it impossible to start your business without funding? Absolutely not. But is it difficult if you do it this way? Yes, it becomes very difficult. So what we want to do as we wrap up this webinar is make sure you understand some of the common types of funding sources and some of the funding programs that you might want to consider as a small business owner. All right, first things first. And I think I have them in order of importance, or maybe I may switch to the bottom and the third one. Grants. There's so much money going around. There's a grant, you name it, there's a grant for it. That should be your primary avenue for obtaining funding, because grants do not have to be repaid. As a business owner, loans are an option, but that's a liability. Remember, your job as a business owner is to keep your expenses as low as possible. So if you are applying for loans, I need a business loan, you just added a business debt, a liability. So that should not be where you start. You should be attacking all grants. In Maryland, and I'll show the website, there is a website, the Maryland Department of Commerce. I have that page bookmarked, that I go there regularly and I look for grants. And I'm an established business owner, but why would I ever turn down free money? If I'm doing the thing that the grant asks you to do and I qualify, the only difference is applying. So it behooves you to look there first. Apply for any grant. There are lots of grants for small business owners. There are grants for special minority populations, whether it be race, disability, gender. So you want to flag every avenue you can for grants. Loans is your next avenue as a business owner. I'm not saying never take a loan. I'm saying don't start there. You want to find free money and then go into loans if you don't have a choice. Remember, they're going to look at the 5 C's. And so sometimes when you're trying to get money, you need money. That's every business owner's frustration. Well, if I had the money, I wouldn't be applying for the loan. Well, the funder's saying, if you can't show me any money, how am I going to get my money back? And so they don't want to give you any money if you haven't proven that you can secure and get their money back. So loans should be your second line of action. You want to apply for loans that are specific to small business. So you have the Small Business Administration, you have some banks. I'm not promoting any other bank or any product, but look for them. I know PNC has one, M&T. You have a lot of banks that say, we support small business, put the money where the mouth is. You can go in and ask them, what's your average, how much money do you give to small business? What's the average percentage when you're picking your banking institution? If you're a business owner, go in there like one. Find out the best product and the best institution for you before you even develop a relationship with the bank. Crowdsourcing, there's so many apps out there now, but crowdsourcing is when instead of going to a bank, there are people that go out and they do sort of group financing of a project. And there are platforms out there now that even does this for you. So you can go and apply or be in a crowdsourcing venture that you say, hey, I need $20,000 to get going. They're going to have you pitch it, You're probably going to have a business plan, and then individuals can decide if they want to invest in your venture. And so the crowdsourcing platform will then say, you know, what the percentage is. They'll dictate the loans. And as you pay that back, they will divvy that money to the individuals. So 10 people can get together and say, we're all going to give $1,000 to this project, or 2,000, and that's how you're going to get your 20,000. As you make that payment back, then that money will be divvied up between the 10 people that that invested into your product. Of course, with anything new, there's lots of gimmicks out there. So I would say you do your homework, you make sure you understand, but crowdsourcing is this sort of, I don't want to say it's a new phenomenon because it's been out for a long time, but it's one that's starting to get a little more attention. Again, as we had a great influx of businesses join the business platform last year, 4 million of them, lots of people were looking for money. And so crowdsourcing got a bigger lift because people are, engaging that avenue more now. So we're seeing it more, but it's been around for a while. So be careful. Again, any good thing can also open the door for what I would call foolishness. So be careful. Same thing with grants. The one thing I tell all business owners, no grant asks you to pay for anything. So if you come across something, pay to do this grant, pay to apply for grants, it's probably not something you want to be involved with because grants are free. So types of funding, secure some grants, look for loans, but as your second resort. But again, loans that are specific to small businesses or to a certain population, and we'll talk about those next. And crowdsourcing if you are looking to have multiple investors instead of the traditional way of going to a banking institution. All right, so let's talk about some of the programs that are available to us. One office that you should be very familiar with is the SBA, Small Business Administration, which is a governmental agency. The Office of Diversity, Inclusion, and Civil Rights Resources. There is a wealth of information on that site. And their mission, and this is right off their website, is to create a diverse workforce and be inclusive of culture and ensuring equal access and equitable treatment to all entrepreneurs. So that includes persons with disabilities, that includes persons of different races, it's gender, it protects gender. And so you wanna make sure that you are connected to this site. Bookmark it, make sure it's yours, you know how to go there. There are different programs within, but this is the larger umbrella at the small business, the SBA, that speaks to special populations. So you want to be very familiar with that. And we can wrap up with that link too. So when we're done, we'll send a host of links out, and hopefully the facilitators of the webinar series can get that out to you. All right. If you're in federal contracting, you should be very familiar with 503, the Rehabilitation Act. If you do any federal contracting, or if you're in business with someone that does, this section governs how government agencies, contractors and subcontractors engage persons, businesses that are owned by individuals with disabilities. So you see this little award. If you are getting into contracting, you want to work with someone that has earned this award. That means that they sort of earned this seal, that they are very connected with the community in terms of disabilities, and they give a large percentage of their contractual opportunities to business owners that meet the disability requirements. So be very familiar with that. Again, if you do any contracting, or if you're working with a company that does contracting, ask them about their inclusion award and where are they. So there are different rates. Not looking at the numbers, just like you can get in, you can get this seal if you give at least 30% or 20% of your business to a smaller business that is owned by an individual with disabilities. So another great resource. Then other special programs that are out there that you should know about. There are some at the federal level, and then there's some at the state level. A lot of times they will mirror each other. You want to be familiar with both. So at the federal level, there are programs like the 8A Business Development Program. Again, you can go right to the SBA and get that information. All these links are actually live on our end, so we can shoot those out to you as well. The Small Disadvantaged Business, so that's a different program that you may qualify for, that you want to know about at the federal level. At the federal level, even in a lot of the contractual opportunities, they have what's called a Small Business Set Aside award or contract, meaning only small businesses will win that work. Any other large company could scoop it up easily, but that's why they set it aside and say, no, you big companies, you well-developed ones, we're not going to give this to you. This is a small, manageable product or project that would be good for a small business. So we set it aside for small business owners. Big companies, you can't touch it. As I said, there's a woman-owned, gender-specific programming options. And so the woman-owned small business federal contracting program, you get that designation on your website once you apply. It means that, again, a lot of the federal projects will say a certain percentage of work has to go to this type of this business owner. So it could be a person of minority, it could be woman-owned, it can be persons with disability. So these federal certifications is something that you would like to add to your business profile. And then, of course, you might be familiar or you could imagine, go back one more, the programs for veterans. So at the federal government level, there is a veteran assistant program where, again, you can get the same type of designation that it's a business owned by a veteran. And then, without spending too much time, just know that those same programs are replicated at the state level. So the Minority Business Enterprise Program, Disadvantaged Business Program, the ACDBE, if you have a retail business and it's something that you can see at an airport, there's a whole program designed to help small businesses develop concessions at the airport. Before I got into business, I didn't even understand how difficult that was. I didn't even think anything of it. And then in this work, I realized that that is a very difficult thing to conquer. And so there's a whole state level program designed to help you get your stuff into the airport. Same thing, set aside award, you got Small Business Reserve, and then Small Business Enterprise as well at the state level, and veteran-owned business. So those are certification and special programs you can join that will put your business in good position. Whether you do federal contracting or not, or state level contracting, having that seal lets another business owner know that you're at least certified. And so a lot of small business owners, we connect with one another. We're looking for someone that does that. And then just some large companies would like to say, hey, this is the type of business I support. If they want to pour back into a community, you may have, if you're familiar with Tory Burch, the designer, she does a whole thing for women because, again, she's a woman-owned business and she knew how difficult it was. So she has an entire program devoted to women. And I believe one of the requirements is that you have this certification to getting her grant and development program. So be aware of the special programs. All right, and we're going to wrap up talking about funding sources, resources. So earlier in one of the slides, I mentioned that one thing you should know is the Maryland Department of Commerce. That's the website. We can share it with you. There is a page, the financial incentive page. You should know that page. Bookmark that page. I sent you right to the fund page, where you can just Google and get to the Maryland Department of Commerce. and look for their financial incentive page. On there, you can go down or drill down to grants, and then you can drill down to loans. So it's a list. I mean, we couldn't even go through all of them, which is why I'm just giving you the website. There is a list of grants to apply for and a list of loans. So you want to start there. And then you want to bookmark your local government Department of Commerce. Look at their financial incentive page. I'm not going to say most, all jurisdictions in Maryland have a Department of Commerce that's going to have specific programs only for residents and businesses of that area. So at the state level, it's across the state. If you go to your local Department of Commerce, you're going to probably have to meet requirements, which means you are business in that jurisdiction. And then one other resource is the Maryland One Stop Portal. You can do lots of things there. You can look up license, permits, costs, and all that other good stuff. But if any of the state agencies have grant opportunities, you'll see them there. You would also have seen them on the Maryland Department of Commerce, but you kind of get 2 for 1 when you go to the Maryland One Stop Portal, because you can check out, see, your local permits, state level permits, I should say, not local, state level permits, licensing costs, and all that good stuff. And then if there are any grant applications out there, you'll see them there as well. All right. And so before I wrap up, one thing that always comes in questions after presentations like this is, what are my next steps? So you just dumped all this information, and what should I be doing next? So here is some quick recommendations that I would offer in terms of next steps for a business owner. Start with your SMART goal, because if you don't know where you're going, you don't have an idea, you're likely never going to get there. In one of my classes, I say, if we all jumped in our cars and tried to make our way to Texas, we probably would get there. But if we didn't have GPS, or at least old school map on the dashboard, it's probably gonna take us a long time. I know Texas is a good drive anyway. I'm a Florida native. I made that drive once. That's 18 hours. I don't know what the drive is to Texas, but I guarantee you, without a map and some very specific directions, it's probably gonna take us a long time to get to Texas. So without some very smart, specific business goals, it's probably going to take you a long time to get where you're going if you don't map that out. So that's your very next step. What is success? Make those goals, make them smart, specific, they're measurable, they're achievable, they're realistic, and you gave it a time. Not, I'm going to be rich at some point. My company's going to make some money. My company is going to see this much in sales by this point this year, or whatever year. Second to that would be to develop a personal and business budget. If you don't have a budget yet and you're not operating from one, if you're not doing it in your personal lives, it's going to be a very difficult practice to adopt in your business life. And so no matter where you are, that's something you can start today. Develop a budget, outline what you want to spend, have all your categories, and then reconcile each month or at least a quarter to see if you are where you need to be, if you're on target, both for your personal and your business accounts. Learn those concepts to speak like a boss. Again, I put some out there for you. I told you we wouldn't be able to become masters at all of them today. But if you, in that slide we showed, if some of those terms meant nothing to you, I want you to continue to educate yourselves and be familiar with some of those terms. As a business owner, you don't have to do it all and know it all, but not too much should be unfamiliar. Like I said, businesses don't go out of business because they don't provide good products and services. Most of our businesses don't survive because they don't do good business. Financial components are usually one of the main indicators of not doing good business. All right. And then last, in terms of next steps, I threw some websites out there. We'll follow up with an email, or we'll try to get them to you as best we can. Start to go explore some of those websites. Go bookmark the Department of Commerce. Apply for every grant that you qualify or are eligible to apply for. It's free money. I hear business owners say, I don't have time to do grants. You don't have time not to, because financial and working capital is the thing that will help your business. Most businesses fail because they don't have it. So how would you not have time to go secure free money? When I'm working with business owners, it's like, no, it's a thing you must make time to do. So in terms of next steps, those would be the most important. All right, so we don't have time for our official review. So we only have 2 minutes, and I want to save some time for questions and answers. So we'll skip right over to that. But a review, basic questions that I'm saying is that the first thing you should do is start with the budget. Knowing that bookkeeping is the basis for all financial management. Understanding cash flow, that's something you need to know, how money moves in and moves out. And then the fact that you can take an owner's draw and act your wage, make sure you're paying yourself. Those would be the things that I want to make sure you leave this webinar knowing. So I'll give the last 2 minutes for questions. I don't know if participants are able to unmute themselves, so we can take them verbally if you are allowed to do that. And if not, we are still making use of the chat. So any questions? We can move forward. And then before we go, as we wait for questions to come in, I want to make sure we skip ahead to our contact us page. If you have any questions, if you can certainly reach me directly or contact the webinar host and get to us. But I want to save the last minute for questions.
Dr. Payton.
Yes.
I have a question. I'm very familiar with the concept that many of the businesses fail within the first 1, 3, 5 years because of the financial difficulties that arise from the not understanding. But given owners are able to understand this material, what is the percentage of businesses to be successful that would come from knowing this information?
I don't have those. Thank you for the question. I don't have those exact stats, but I know that all the research literature supports the fact that if businesses are not financially savvy and they haven't had a good grasp of their management, they are likely to fail. So I can't say the exact number that says, if you did this, you would be successful. But I know the rates of businesses that are successful, and most research shows that if financial management wasn't, they didn't have a good hold of that, they didn't see success. All right. Well, we are right at 11:30. We took it to the wire. I really do hope that you got some information, something that you could use. Again, on behalf of our organizations, I apologize for the fact that I had to do this on a mobile device. I hope I wasn't doing this too much. But what was most important to us is that we spent some time with you this morning and to give you the information that you needed as a small business owner. So with that, it is 11:31. I am actually overtime, so I'll wrap up. Thank you for your time. Thank you for your attention, and good luck. Make sure you act your wage, pay yourself, and dig into those resources. Thank you so much, everyone.
Thank you so much, Dr. Payton. This has been extremely informative, and we really appreciate you joining us. And thank you to all of the attendees for joining us for one of our financial resiliency sessions for this month.
Thank you. And with that, we will end the recording and hope everybody has a great rest of the day.
All right. Thank you. Take care, everyone.
Bye-bye.